Hello and welcome back to Gameoftrades, your #1 channel for videos on the stock market and cryptocurrencies. This video is going to be focused on Bitcoin that has recently suffered from quite a sizable correction here. We saw the crypto fear and greed index dip down to 34 here for the first time since the September to October correction. Around here there was a lot of fear in Bitcoin. There's starting to be some fear right now. Now, if you watched our video from last week where we talked about smart money leaving Bitcoin, we talked about the revived supply last active over the last 5 years that was spiking, often signaling local tops in the market. That's exactly what we saw here. We also had divergence build between the price making a higher high and the RSI that was going down. That's a bad technical posture, especially when you're breaking out to all-time high, and it diminished the chance of Bitcoin actually holding this breakout. So we saw this correction. We also talked about it extensively on our Twitter, and we've now come into that support zone that we talked about in the last video between around 53 and 55K. That's exactly the zone that we're starting to enter. So we're going to talk about that in this episode, whether or not we're still looking for a bounce or whether we could actually see some more downside on Bitcoin. We are big long-term fans of Bitcoin. We believe it's the perfect combination between innovation and protection against currency debasement. But knowing how to time these types of corrections, time the bottoms and exit at the right moments, that can give you a tremendous edge against other players in the market. If you're interested in following this with us, make sure to smash that subscribe button. And now without further ado, let's get right into it. All right, so I want to start off by looking at that indicator that helped us identify that local top. This is the revived supply, last active 5 years ago. So this is smart money. These are people that have been holding their Bitcoin for over 5 years. They know how Bitcoin behaves. They know how to benefit from cryptocurrencies. And so when they're creating selling pressure like this, it's going to have an impact on the market. So the fact that it's still going up here might be a sign that the correction isn't completely done yet. We might have a little bit more downside to go. Typically, you start to see a bottom in price when you start to see this come down. So for example, in November here, you had the revived supply start to come down. And once it came down significantly, that marked the low and the next leg up on Bitcoin began. Same thing here in January, you started to see the revived supply come down. And then you had price bottom and it marked the next leg up for Bitcoin. But I'm not quite done with this indicator right now. Pay attention to this here. This is a 14-day moving average of this indicator. So it's actually a lagging indicator. So let's take a look at the 7-day moving average instead of the 14 days. And you can see here it is starting to come down. So I think it's reasonable to say that the 14-day is going to start coming down very soon. And if we take a look at the raw data here, we had a big spike in selling right here at the very top of this move at the all-time high. And since then, we've had a little bit of selling, but it has calmed down significantly, right? And starting to come down. So again, correction might not be completely over, but we're starting to see signs of it slowing down. This is good news, and it does tell me that the risk reward is more favorable on Bitcoin now, and we can probably start to step back in to buy. Now, another big data point that we're currently paying attention to is the whale supply, right? So these are addresses that have 100 to 10,000 Bitcoin. So again, these are big players. They have a lot of influence on the market, and it's worth paying attention to what these guys are doing as retail investors. This is the big difference between Bitcoin and the stock market, where you have very limited data. Here we can actually find out what the big guys are doing to give you an edge over other retail traders. Now, let me just show you exactly how this works. For example, throughout the summer consolidation here between May and around July, you had price go down, but the whale supply actually go up throughout this entire period. So that told you that the big guys were accumulating Bitcoin heavily throughout this period of consolidation, and it eventually marked a big bottom and a nice rally on Bitcoin. Now, if we zoom in a little bit more here into the last few weeks of trading, You can see the September and October correction here. As price was going down, you had whales accumulate, right? You had a big pump right here and another big pump here, and that eventually marked a bottom at around $40,000. This is exactly one of the indicators that helped us time that bottom. And you can see we're starting to see a very similar thing happen right now. Price is going down and the whale supply is pumping here. So maybe this is just the first pump. We're going to see another one before we get a big bottom. Maybe we bottom right now. The point is that unlike between the end of October and the beginning of November, where we had the whale supply come down, it's now trending back up. So again, it makes the risk reward on Bitcoin a lot more attractive. This is exactly what we focus on our website at gameoftrades.net. We post weekly overviews of Bitcoin where we look at all the big on-chain developments that we're currently seeing. This was the article from last week where we talked about the revived supply as price was topping out here. And we try to actually give you guys our preferred scenarios with areas to enter when we're expecting a correction and areas to exit when we're expecting a big rally. So for example, here you can use the interactive charts that we have on our articles where you can actually see how these trades played out. You press on the play button, you can see it bounced off support, marking a nice objective area to enter. In these articles, we really try to make our convictions as clear as possible with as much education as possible. I think that's absolutely essential, that we don't just tell you guys where we think the markets are going to go, but we actually explain the reasoning behind it. The crypto membership is just ridiculously cheap compared to any other analysis that there is online. You really can't find anything like this for under $100 a month. We're really trying to make this as accessible to as many people as possible. So again, don't hesitate to check it out. So now again, getting back to the video, I want to take a look at one of our favorite indicators here. This is the total transfer volume in loss. This is probably the best bottom timing indicator out there. Nothing compares to it because by looking at this, you can spot capitulation. And when there's capitulation, that often means there's a bottom. You can see, for example, here, the bottom of the 2018 bear market, you had this massive capitulation here on the total transfer volume and loss. And as this was coming down, you had a big bottom marked, the bottom. You had the same thing in COVID, big capitulation. And as it came down, you had the bottom and the bull run began. In May 2021 here, big capitulation as we saw the China crackdown here. And as this was moving down, it eventually marked a bottom. So right now what's happening? We're starting to see a sign of capitulation here. We're seeing a spike in the transfer volume and loss. So a lot of players are selling their Bitcoin at a loss here. Once this begins to turn around, it's going to mark a big bottom on Bitcoin. Now from a technical standpoint, our preferred zone of support is around this area here at around 53 to 54K. Corresponds nicely to the bottom of the price channel that we've been looking at here. Price has just been bouncing up and down within this channel beautifully and marking these two lows here. So it's a logical level of support. Now make sure to look at this chart on the logarithmic scale. This is a log scale chart. If you look at the linear scale, so not log scale, and you try to draw the same channel, it's not going to give you the same support. The linear channel gives you support at around 51, 52K. So if you have buy orders at 51K, but price bounces off 53K, your orders aren't going to get filled. I think a lot of people are paying attention to the linear chart, but the real technical picture is on log scale. I hope you guys enjoyed this video. If you did, make sure to smash that like button. Now, in the meantime, I wish you good luck on your trading and see you next time.